Sure, Perennial Value's been going for over 15 years, as has the small companies business. Now, the small companies business has always had a portion of its money in microcaps, but from February 2017 we launched the Microcap Trust, so that's the first time investors can really get direct access to our best microcap ideas. We have 6 people researching small and microcap investment opportunities. Importantly, 4 of those are dedicated to both smalls and micros, so we think that's a very big team versus our competitors. Another point of difference is we've got a guy based in Perth doing resources for us. So Sam Berridge, he's a geologist by background, has been in the financial markets for over 5 years, so very experienced both within industry and within covering microcap and small equities. Being based in Perth gives us a great edge. Obviously there's lots of site tours that he can do, go and visit mines, whether it's Kalgoorlie, Port Hedland, it's very easy to access from Perth. And clearly he's interacting with the Perth community on a daily basis. So we find we're getting really good investment ideas out of having a man on the ground in Perth. Well, what we decided to do when we set up the microcap product was a lot of us had personal investments in the microcap space, stocks we couldn't invest in for the fund before because they were too small. So we agreed as a team to sell all those investments, and we've put that money in the Microcap Trust, paying the same fees as everyone else. So there's strong alignment there, there's a strong personal interest in the funds from the staff involved. The main difference between small caps and micro caps is the size of the universe. So whereas small caps we're looking at around 700 companies, this expands to around 2,000 companies as an investable universe when we look at micro caps. So to manage that size of universe, we need to employ a few extra tools. We're still doing the amount of company visits, over 700 company visits, but we also use some grunt from FactSet, where we've run some screens weekly to come up with the best value ideas that either based on historical numbers, so stocks that aren't being looked at by the market, or looking at broker numbers for those few stocks that are covered by brokers. The other major difference was the majority of those stocks, 1,400 when we last looked at it, aren't covered by any brokers. So that's where you really have to rely on your own work, and that's where our modelling skills come in. We're looking for 5% excess return over the benchmark, and we're looking a little bit further out. We think 5 years is an appropriate investment time frame. Well, there's lots of value in microcaps. By nature, it's a very under-researched part of the market, so there's lots of gems out there that just having no attention by the market. Companies with great cash flow, good growth prospects on very cheap valuations. So it's a perfect place for a value investor. One thing we have had to change in our process is the dividend yield. We think microcaps, you want to see them investing back into the business. So we don't require our portfolio to have better dividend yield than the market in microcaps. We do in our small and large cap products. So we start off with the universe, as I mentioned, of around 2,000 stocks. That's a very big universe. So we do a lot of company visits, over 700 company visits, but we also try and screen the universe looking both at broker numbers, but clearly a lot of these stocks aren't covered by brokers. So we employ some FactSet data and look at historical earnings. We're looking for good balance sheet, good growth, decent dividend yield. And that prioritises our research priorities. We then go and do the research, 10 years of history if we can get it, 3 years forward forecasts. And another difference with our small companies product, we're looking at that 3rd year forecast. So we're looking 3 years out with microcaps. And if we can find value 3 years out, that stock's eligible for investment. And clearly we'll weigh up the size of the company, what sector it's in, to see if that's a sector we're positive on at that point in time. Clearly if there's a stock that's big enough for the small companies fund and still fits in the microcap, we're going to put that best idea in both funds. So for example, a stock around 100 mil market cap that we think looks great value looking 1 or 2 years out, you'll find them in both the microcap and small fund. Where there will be difference is obviously for stocks above 500 mil, that's too big for the microcap fund, so that'll just be in the small fund. And equally, if there's a stock that's either too small, so say sub 50 mil market cap, that's only going to be in the microcap. Also, if it's a stock that looks great value but only looking 3 years out, not on a 1 and 2 year view, that's going to be more suitable for the microcap fund. Yes, we've made a lot of money investing in IPOs through our small cap product, and we'd expect that to be continued in microcap product. We've taken it one step further, however. We can now put up to 20% of the fund in pre-IPO opportunities. So these are stocks that might be 6 to 12 months away from listing. They might just need some growth capital to complete an acquisition. And we're using our experience there of identifying companies that are going to do well when they list and getting in a little bit earlier, and usually you get a 20 to 30% discount at that point. Well, the risks are probably another level above smaller companies when you go to microcaps. So we really ramp up our view of we want companies with strong balance sheets, and about 60% of our portfolio is companies with no debt, with strong cash balances. We think that's really important in microcaps, and you want that optionality. If the company sees an opportunity to grow, you want them to be able to access cash that they've already got. So that's really important. We also think you spread your bets across the portfolio. So we're going to have over 50 stocks in the portfolio. The typical investor for microcaps is someone who's quite early in their accumulation phase, really focused on capital returns. You won't be getting the dividend yields that you're getting from our other products, but over a 5-year period, you would expect strong capital returns.